Good evening, traders. It is August 25th, 2024, and this is my weekly pre-market analysis. Coming into the week, we still have 3 Fed speeches to deal with. However, what is more important to me is how the market deals with the coming data. The coming data, let me bring that up. Let's see here. Coming in on Monday, 8:30 a.m., we have core durable goods orders and durable goods. Tuesday, we have a consumer confidence at 10 a.m. and then we have an S&P CS composite and an HIP at 9 a.m. Wednesday, we got 2 Fed speeches, one at 1:15 a.m. and one at 6 p.m. And then we have crude oil inventories in between at 10:30 a.m. Thursday, which is going to be a big day, we have unemployment claims at 8:30 a.m., prelim GDP price index, goods and trade balance, and prelim wholesale inventories. And then also at 10 a.m. we have a pending home sales and natural gas storage. 3:30 p.m. Bostic speaks. And Friday, which is probably going to be a large size day, we have at 8:30 a.m. core PCE, personal income outlays and personal spending, 9:45 Chicago PMI, and then 10 a.m. revised consumer sentiment and revised inflation expectations. So that's what's going to be really important in the coming weeks, how the market takes the data. And to me, the coming data could be like candy to an already overactive child. In my opinion, the market is the child crying out for more and more candy. The child wants candy, but what it really needs is a balanced meal. Instead, the child gets its fill of candy and goes on an epic sugar rush. If you've ever seen a child on an epic sugar rush fighting the sleep that comes with the crash, you know that it is a nerve-wracking, long, and drawn-out process. 1 minute the child is about to doze off, the next they could be dancing and crying, and sometimes all at the same time. In terms of the market, I think we're in the midst of that last overdose of sugar. So for the next month and a half or so, we will see the dancing of the market as it fights to go higher and the cry as it falls lower. And some days we'll get it all the same day. This will carry on for at least, like I said, a month and a half or so. When that child finally crashes from that sugar rush, it is a deep sleep where they will likely fall out from that crash and sleep in just about any position. The market is going to do the same when the sugar wears off. During this fight up, I expect to test and break to new highs. So on the chart, I have marked a few key levels of what I will be focused on this week. And what we're going to look for during this month and a half, we're going to look for a lot of small fights up with bigger and bigger fallouts. So we're probably going to look to see something like this week, where we get a little lower and then push a little higher, a little higher, a little higher, and then boom, we're going to get a probably pre-market or overnight, we'll get a We'll get a drop back to kind of wipe away everything that's happened, and then we'll start the process all over again. Trying to get up, and then maybe Wednesday, maybe Thursday, we'll get that bigger crash out to where we pretty much fight with trying to break through and get to that the upper part of that critical area, and then at some point we're going to get an outsized drop from that critical area, and then Friday we could get some consolidation, and at some point Friday you could see something like this again. So that's what I'm looking for throughout the week. This critical area that we're going to be fighting for most of the week to stay in is going to be from this 56.41 all the way up to 56.88. I expect us to spend a good portion of the week inside that critical area. And then we have our jack resistance at 56.41. I'm sorry, jack support at 56.41. Queen support at 55.73. Let me make sure I'm giving the right information here. And actually, these are the 56.41, 56.27, and 56.03. I'm going to look at those as support this week, but usually this is kind of that chop zone or chop area that I try to stay out of. But for this week, I'm going to focus in on it as support. So that's what I'm looking at this week. I'm going to, again, anytime we hit over that 56.65 and get near that 56.88, I definitely will be looking to add some swing shorts for the long term. And some of these swing shorts, like some of the ones that I added last week, if we get a point or hit a point where there's a gain of 30%, like I did on some last week with the drop, I immediately exit and take the profit. There's no point in sitting on it if you're able to get 30% within the first couple of days of opening the position. Right now is a good time to take that. And each time we hit back up above that or near that 56.88 to 57.32, that's kind of my top target for the week. That's going to be a great place to put those swing shorts on for the long term. You want to make sure those expirations are well past October, or well through or into October. So that's pretty much it for the week. The actual chop zone that I'm looking to kind of stay out of is going to be that 56.47 to 56.11 area. You want to be really careful being positioned there. So trying to get used to carving out the time to do videos again. Hopefully I'll get back in the flow of things pretty soon, but just wanted to kind of give it a try since I had a little time here Sunday night as I get ready for Monday. So I hope this helps. Remember, like I always used to close out the videos, your most important job as a trader is to protect the capital that you already have. You do this by knowing and understanding the risks you face in each position and in current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's go make it a great one.